Hello and welcome back to another video on this channel. Today we are taking a look at Intel to see whether we are buying or waiting for a price to fall. Intel is trading in US dollars. The market cap of this company is almost $130 billion. Its trailing 12-month PE is 6.76. This company is paying $1.46 in dividends and yielding at 4.64%. These are the key statistics of Intel. Now let's see its financial statements. Personally, I like to see at least 10 years of financial data. Let's start with income statement. Under income statement, we can see that revenue of this company is growing every single year. The net income is also growing. The number of shares outstanding is decreased as compared to past 10 years. But if we take a look at its quarterly report, we can see revenue is decreasing. This is the reason why its share price has fallen so much. Its net income is decreasing and company is buying back its shares. Now let's move on to balance sheet. Here we can see the current assets and total assets is increasing every single year. Its current liabilities and total liabilities is also increasing. Company has more assets than liabilities, which is a good thing to see. Let's move to its cash flow statement. On the screen, we can see cash from operating activity is increasing. Dividend paid by this company is also increasing, which means company is increasing its dividends. And free cash flow is also uptrending. But again, if we look at quarterly statement, cash from operating activity is down and free cash flow is down huge. Let's move on to freeform tool to see how company has performed over the past few years. In freeform tool, I like to see at least 7 years of financial data. Here on my screen, you guys can see revenue is growing at compounded annual growth rate of 3.97%. The income has grown over the past 7 years at 7.17% compounded annually. The number of shares outstanding has decreased by almost 2.04% over the past 7 years. Dividends per share has increased by 6.53%. The average free cash flow of last 7 years is $13.3 billion. The total liabilities of this company is $69.2 billion. If you divide its total liabilities by its average 7-year free cash flow, it will take them 5.2 years to pay all of their liabilities and about 3 years for non-current liabilities. The average PE of this company over the last 7 years is 12.94 and its average price to free cash flow value is 14.25. By looking at its financial statement, we can conclude that Intel had good balance sheet, but from past few quarters, company has really underperformed. Its revenue is down, income is down, and free cash flow is negative. Despite its free cash flow is negative, Intel is paying about $1.5 billion in dividends per quarter. If we see negative cash flow in future, company has to take more debt to pay dividends, which is not a smart move, or to issue more share, which is also not a smart move because share price is down huge. Company may cut back its dividend, which investors won't like, and this will put more downward pressure on its share price. Let's see what company is doing to grow its revenue. Intel is building 2 major new chip factories in Arizona worth of $20 billion. This is also a reason why free cash flow is down huge, because company is investing back in themselves. Intel is making move to stay competitive in business, and personally I don't think this business is going under anytime soon when company is spending so much money back in themselves. Right now I'm happy to hold my share even I am down 25 to 30% on those shares. I will see next quarter how company has performed, then I will add more shares in my portfolio. If you enjoy this video, please leave a like and subscribe for future content, and let me know your views on this company down in the comment section. See you in the next video.